It is Tuesday, April 26th. I am your host, The Cowboy. Welcome to the chart of the day. Let's get started, guys. All right, today we're going to take a look at the dollar, at our old friend, the dollar. Wow, can you believe what's going on in the market? So today we have had earnings, which are pretty decent from Google and Microsoft, and the markets just crashed lower. So NASDAQ made a new low. We've talked about NASDAQ yesterday, so check out that video. They felt pretty heavy into the close here up until the futures markets finished up. Bitcoin was trying to kind of follow through to the downside as well, and it still finds resistance at about 38,000. We'll see if that's going to hold overnight. But things are not looking very pretty in terms of risk. And that's why I wanted to jump over and take a look at the dollar index, because I think it's one of the causes of what's going on. Not the only one, obviously, but we've been having a lot of dollar strength here for about a year, more than a year, and it's starting to kind of take its toll in the markets. So the dollar index, it is pushing above 101 level here, almost close to 102. Now, these levels haven't been seen since the COVID spike there at about March of 2020. So we're getting close to those levels, but it's been in a pretty strong uptrend. We have broken through the top of this kind of trending channel, kind of a characteristic of a third wave type price action. So I'll be watching this to see how it unfolds, but it's definitely pretty strong. And this is just a simple chart. We're going to take a look at some counts. We're going to take a look at some ratios. But I just wanted to kind of you to see something clear and clean in here, kind of what these levels are. So dollar index, it is breaking up and it looks pretty bullish. Now I'll hold on here, because there's might be something going on here where I can see a 1, 2, 3, 4, and 5. So we'll dive into that. But let's not get carried away here. It is moving higher. We gotta respect that, but we also have to keep in mind where we are in the sequence. So that's the dollar index. Coming back here, I'm going to show you a monthly chart as well, and you can see in here on top I have the MACD line, which is broken to the upside in here, so that looks pretty bullish. The alligator jaws are kind of opening up, and usually when this kind of trends above zero line, you have more of a bullish trending market. Here, as you can see, a very strong monthly candle. We still have about 4 days in this month until it closes, but we have broken above this horizontal resistance, and I'm very curious. That's why I'm keeping an eye on the monthly to see if they're going to be able to close this on the monthly basis. If they don't, and they're pushing back lower, that means that we're going to get back to some kind of a retracement in here. But pay attention to the monthly close above this $100 line. The RSI, it's up into getting close to the overbought, but it's nothing to kind of write home about. I mean, it can be overbought and still move another 20 points higher to 120 and still be fine. So I'm not worried about that. Going here into the weekly time frames, I just want to kind of show you a solid trend in the MACD. Just a beautiful push higher. We're probably going to get a crossover here. I'm very curious to see how this is going to pan out. But a series of weekly candles. What this means is that until you're actually starting to see some sort of a price evidence from the dollar that it's about to reverse or it's going to enter in some kind of a correction, and that has to be confirmed, because here, look at this, right? You had the bearish engulfing out of the breakup higher. You could have thought that this was a final fifth wave. The market came back, got into the 200-week moving average support, and then it was up onto rally from up there. So this is a very important, kind of equilibrium that the market respects. So the moment you move above it, you tend to be bullish. The moment you're below it, you tend to be bearish. And we've been kind of onwards and upwards on the dollar index. So take a look at this. What I'm going to look for is I'm going to look some kind of an inverted hammer, maybe some kind of a shooting star, some kind of a bearish engulfing, formations, inverted hammers, formations that show you that you could have a pause in the trend or possibly a reversal. For right now, if you're paying attention to the weekly charts, they're bullish. Here is the RSI as well. Now, taking a look at some longer time frame in here, and I want you to see the dollar index kind of going back to 1973. So we're 50 years back. And I mean, this is a very, very, so I got to say this from the beginning, this has got a very, very heavy weighting towards the euro, towards the British pound, and toward the Japanese yen. So these are the largest holdings into the dollar index, and, the movements and the weakness in those particular markets are going to be reflected into the dollar index, that much more. If you study the dollar index against some other currencies, more emerging markets, things in South America, you're going to find out that, the dollar has actually been weakening against those currencies. But, it is a proxy for risk. So it's kind of what everybody's watching. So I have to look at the dollar index as a big indicator here. So this is it's been a big structural decline since 84, 85, and you've made lower lows in here, right? You've made, lower highs, just coming down and down and down. And this is the first time where we're starting to attack the highs here back from 2017. So, I don't have a proper trend line in here to show you kind of what's going on, but it looks like it's been broken to the upside. And I'm starting to watch some horizontal levels. We are approaching this back in at about 102 on the monthly. And I want to see kind of how we're going to close on there as well. I mean, you can see through these arrows, these levels have been tested several times back in the past. If we're getting above those levels and close above those, there's a big danger that you're running all the way back to 120. What that's going to do to the markets, who knows? I mean, this could be a very sharp rise. If you get a big collapse in the market, people are going to flock to the dollar, U.S. Treasuries, Japanese yen, and the dollar is one of those, cash, right? It's one of the things that people want to hold when it comes to any sort of market crash and risk-off market environment. So I'm watching these levels here, and I want to see kind of what's going on. You might already notice some of the counts. It does look like we're in some final stages maybe of a fifth wave in here, but we'll see. It's very important how we close this month. I'm going to continue to kind of repeat that because on the monthly candles, even if you're basically higher on the daily and weekly, those monthly candles might have a different close in a line chart. So I'm watching those. Now, coming lower here, I'm going to show you the count. So this is, again, kind of going back about 20 years, 2003, 2004. And here's what I have a count on it. What I'm looking at this as a wave 1. I mean, pretty clean impulse in a 1, 2, 3, 4, and 5. Then you come in an impulse in an A. You go up in a fake rally in a B wave. You come down here in a wave C. So this is an A, B, C down for a second wave. Then you go up in a leading diagonal in a wave 1. You do a wave 2. You go up in this larger third. You come down in a fourth. And you're doing a leading in 1, 2, 3, 4, and 5. I think this is a pretty clearly 5-wave type price action up into a third. Now, here's the deal. You're coming back into a corrective pattern in here, which looks to be another ABC. 1, 2, 3, 4, 5. You go up in an very awkward corrective pattern. It could be a WXY, an ABC in here, an A triangle, B up in C, whatever you wanna look at this, but it's clearly was a B wave. So you go I, A, B, and then down in a 1, 2, 3, 4, and 5 for a wave C. So it's a zigzag, with the wave C terminating above the wave A low. Now, what's interesting in here, and this is on the weekly time frame, you can see how wave A got into the territory of the wave 1, but wave 4 did not close in the territory of the wave 1. So, I think I can still digest this as a fourth wave type structure, and you know, you know, I will accept the fact that this fourth wave, you know, came right at the top of the wave one, but never really closed back below that level. So we'll give this account the benefit of the doubt here in a 1, 2, 3, 4, and 5. You know, dollar is more of a cycle. I don't think it's a super, you know, strong trending indicator in here. So there could be just bounces between horizontal lines. So if we get back to, you know, let's say towards 104, that's the top of the range. And then you can kind of come back down towards 90 in the next down cycle. So we'll see what happens. But, you know, I think we can apply an Elliott wave structure to this. I think it looks fairly decent. What I have in here, I have a fifth wave, and I have a measured move since wave 3. It's you know, kind of, you know, it's not a super strong advance in here. I don't have some fee projections, but I'm going for an equality here between wave 1 and wave 5, and that comes to about 110. Now, it doesn't have to get hit. You're going to satisfy the wave 5 the moment you break above the, was this a higher high? I'm not sure, but probably not. And, you know, if you kind of get back above these highs, you're probably going to be fine in a, you know, in a fifth wave. You're going to, I mean, you're going to avoid having to have a truncated fifth. Now, the structure from here looks still that it's in development. It looks like a 1, a 2, and then you have another maybe 1, 2, 3, 4, and 5. For a 3, maybe it needs another 4 and another 5 before it finishes off. But again, I'm going to look for those signs, you know, from the candlestick, from price action, how we're going to react up into this resistance and kind of see what happens with that. So this is where I'm at in the kind of the wave count. I don't think this is a second wave. I don't have a clear, let's say, 5 wave move out of here. I would have to go in a 1, 2, some kind of a 3 in here with a 4 and a 5 to consider this whole thing a wave 1, and it's very, 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 very awkward, right? The only way that would happen if you're starting the count from these lows and you go in a 1, 2, right? And to start those counts from these lows, that means that this decline still has to be part of, you know, this larger move back in here, and I don't see how you would count that, right? It doesn't look right. It looks like you have a big A, B, C in here, and now maybe you're doing another A, B, C for a much larger, you know, multi-year, multi-decade development in the dollar index. We'll see what happens with the dollar, right? But again, I don't think you can start your count from these lows. It's not appropriate. So let's continue to kind of go in here, and let me take a look one more time. What actually went through my mind if I was looking to see if this is a triangle in an A, B, C, D, and E with the final fifth, truncated fifth that could finish, let's say, an impulsive decline up into these lows. But you know, I'm still struggling to kind of do that. And I don't think you have an ending diagonal here because it's not. So anyway, I don't think it fits the criteria. Anyway, moving on. So this is the count, and then let's take a look. I wanted to show you here, you know, a little bit of a picture in kind of what's happening between. I mean, look at the mirror image. And I wish you could see this a little bit better. I'm going to scroll down, but what you're having here, you have the dollar index up at the top, and then you have the emerging markets down at the bottom, the iShares MSCI index here, so the ETF. And I mean, they're just kind of mirror image of each other, so you can see it right there. And you know, the emerging markets are just getting clobbered in here. With the more the dollar index will push to the upside, the more these guys will come lower. But you know, if we're stabilizing somewhere up into these levels, and you're having, let's say, a big impulse out of here into the emerging markets, right? Let's say that's an impulse and you're looking for a corrective pullback with a little bit of a weakness in the dollar. You know, there might not be a bad idea to go shopping into the emerging markets if the dollar finds a top and we're getting signs in there. I mean, here's the correlation, inversely correlating most of the time in here, and it's a pretty heavy one. So I just kind of wanted to show you, you know, kind of how this looks, and I think it's an interesting chart, and you can use it in your own analysis regarding the emerging markets in here. And, you can look for, divergences, signs where, one, it's not confirming the other, and things of that nature. You can see in here that actually emerging markets have not really sold off that much, even with the dollar index pushing strongly to the upside. So you would expect this move to be much lower. Maybe it's still developing and it's maybe going to start, but just watch this relationship maybe on a smaller time frame. I think it can give you some clues in how you can initiate some positions into this ETF. The next one and the last one that I'm going to show you, and maybe I've showed you this before, I'm not sure, maybe I've talked with the members in the program into one of the webinars, but it is the dollar versus the Bitcoin. So this is where, it's an interesting, love-hate relationships in here. And my Bitcoin only goes back to 2014. In here, I don't have, the rest of the data in this chart, but I don't think it matters. What I'm looking for is basically, I'm looking at periods of dollar strength, and I'm looking to see how kind of Bitcoin behaves during such periods. And you can notice in here that, with its own imperfections, because the correlation is not perfect, like right now it's kind of neutral. It's spending most of the time into a negative correlation, but it's got bursts of positive correlation where, let's say the dollar sells off and Bitcoin sells off, right? Or the dollar goes up and Bitcoin goes up as well. So there are bits and pieces where they kind of have a tendency of move together, but most of the time they're obviously inversely correlated. So you can see in here in this kind of purplish areas, a big rally in the dollar, and Bitcoin was struggling 2014, 2015, 2016, right, until it started kind of breaking out, towards the end of 2016, beginning of 2017, where the dollar index came down into a big weakening cycle, and that, somehow helped fuel, a much larger rally in Bitcoin in here. So periods of dollar strength, Bitcoin is kind of weak and still consolidating, maybe building a ramp, whatnot, but it doesn't work really, really well. Then you have found a low here in the spring of 2018. Then you had a big dollar index run until March 2020, and then the Bitcoin sold off here, came back to 3,000. The dollar index was rising, was consolidating. Bitcoin staged a little bit of a rally, but then fall back down. All of this was kind of, signaled by this strength and no reversal in the dollar index. And then once you kind of started to sell off, and, with the dollar liquidity, with the, fiscal monetary policy, all this that kind of happened over on a macro scale, all the liquidity that got pushed into the market, created a much larger rally in Bitcoin towards 60,000, 69,000, with the dollar index selling off. Now, the moment the dollar index found lows in here, in the beginning in January 2021, you could see that also Bitcoin found a top. It started to, to lose its strength. It started to underperform. Dollar index, we tested those lows. Bitcoin sold off right at about the same time as well. So there was a period of more of a, let's say, correlated type price action. And then dollar index started to rally in here. They did rally for a while here, just in kind of in tandem, but, Bitcoin was never really, didn't really have enough power to continue to push higher under the pressure of the dollar here. It's continued to kind of gain ground, and right now we're actually passing through this, and we're probably going to go back towards 103 highs before we can find some resistance. Now, if that's going to mean that Bitcoin is going to sell off a little bit here, create another leg lower, we'll see. If Bitcoin will remain stable, still maybe in a larger triangle, as the dollar index kind of finishing its move, and then once it finds a top and starts selling off, then maybe the next leg higher will begin in Bitcoin. So I just wanted to kind of touch on that. I think it's important, but the main discussion today was basically about the dollar index, and I wanted to kind of share my thoughts with you on that. Here is again the 50-year time frame on the dollar. So guys, again, I appreciate you being here. Please don't forget to subscribe and like. Let me know what you think, your comments, what else you want to see in macro, in stocks, in in altcoins, You know, we've got in commodities, right? We got plenty to talk about every single day here on the chart of the day. You know, so share it around, spread the love. Come visit us in the Pro Room, and I'll see you guys a bit later. Bye bye.